Yep, I think we are now live. So hello, everybody, and welcome to October's Bar on the Block. I am, of course, your host, Pat. And you know what? Unfortunately, given the current situation with the global pandemic, we haven't yet been able to have these events in person, but fret not. We're going to keep chugging away having these digital panels until somebody comes in and stops me from doing so. So tonight, we are going to be focusing on Bitcoin mining, and we've brought some of the most preeminent players in the space, as well as service providers within the Bitcoin mining scope. Talk a little bit about what we see in the industry today, where we think it's going. Sorry to say, we're not going to give a Bitcoin price impact, but we are certainly going to dive into what we think the future of Bitcoin mining entails. So without further ado, please allow me to introduce the panel, and I'll actually allow them to introduce themselves as well. But perhaps we can start with you, Michael. If you could tell us a little bit about Foundry as well as yourself.
Yeah, thanks, Patrick. Appreciate the invite. We have not done very many of these public announcements here. So yeah, so real quick on my background, I've only been in the mining space for about 3 years. Prior to that, I was what I would call in the traditional worlds now, like manufacturing and distribution and such, and got interested in Bitcoin, got interested in where the space was going. It reminded me very much of the start of the internet when I was in college, when Netscape came out, and then I just really gravitated towards mining and got real excited about it, and spent the last 3 years focused on that space. And about a year ago, got a call from Barry Silbert, and he said, "Hey, we're jumping into the proof of work and proof of stake space. We're going to start a company called Foundry. You interested in coming on board and leading it?" And so the last 12 months have been just a wild ride. It's been a lot of fun.
Well, it's fantastic to have you here. Thank you so much for joining. Dennis, if you wouldn't mind telling us a little bit about yourself and what it is that you guys focus on.
Yeah, basically I come from originally from traditional banking background, worked 12 years in banking, project finance, then metals and mining, gold, copper, rare earth metals, and private equity. And the last 3 years, basically, I was advising, consulting a group which started basically growing business from 1 megawatt into 85 megawatt capacity. So that's quite a sizable operation. And in addition to that, I run this CMG group, a networking group for sort of miners to cooperate and see how this can be supported, some new products basically, or new projects.
Fantastic. Thank you for having us here. And thank you for helping us organize this event as well through the media groups that you work with. Yuri, over to you. If you could tell us a little bit about yourself and Fidelity, probably a company that needs no introduction.
Yes, thank you. So yeah, my name is Yuri Bulovic. I'm director of Bitcoin mining at Fidelity. I was introduced to Bitcoin at Fidelity, believe it or not. So back in 2015, I was management consultant at Fidelity, and the project that I was working on was Bitcoin blockchain strategy for the firm. And so immediately after the project, I wanted to work in this space full time. So I moved over to Fidelity Center for Applied Technology, which is Fidelity's R&D arm, where all of the crypto blockchain efforts even started. I was there in research strategy role for some time, also did a lot of education on the topic across the company, and then 2 years ago focused entirely on Bitcoin mining.
Well, fantastic and wonderful to have you here. And definitely one of the things we're going to be unpacking on this call is institutional demand for not just Bitcoin. That's a topic that's been beaten to death for some time now, but Bitcoin mining. And I think there's a lot of insights you'll be able to share later. Last but not least, Dan, if you could introduce yourself as to what it is that you do with Kraken.
Yeah, thanks for having me. And my role at Kraken is Director of Growth. So my focus is looking at the user journey from awareness of Kraken. So hearing about Kraken on different paid acquisition channels and organic channels, taking those views or those awareness level consideration of Kraken, taking that all the way through to the first trade moment in the product. So looking at that user journey and removing friction from that process. My background's in growth from companies like Uber, where I was on product growth and growth marketing. And then I was very early in the crypto space, building some early products there that were pretty popular for their time. And so I've done some early stage startup growth as well. So I'm the only non-miner in the panel, but we do have a lot of miner clients. And so, yeah, I'm super excited to join today.
And that's fantastic and wonderful to have you here. And one of the reasons that we wanted to ask you, and I'm going to stick this here with you, Dan, to join this panel is one of the things you've been able to do is kind of articulate very complex topics. And Bitcoin mining, of course, is one. There's a lot of misconceptions about it, but articulate it in a very simple manner. So if I could actually kind of get us all kicked off with this, I would ask you to maybe just explain the importance of Bitcoin mining in the security of the Bitcoin network. And maybe if you could even touch on this a little bit. One of the things that we have as an asset management group at Iconic is a lot of people comment that, well, why isn't there just another 100 Bitcoins? Why do I invest in this Bitcoin when there could be 10 more that are replicated and I lose my investment? And maybe articulating to us why mining and all the infrastructure that goes into this is so important and why there will therefore only be one Bitcoin.
That's a lot to unpack there.
You have 60 seconds. Go.
Okay. This is pushing the limits of my capabilities. Bitcoin is about digital scarcity. We know that there will be 21 million Bitcoin, and that is enforced by Bitcoin's monetary policy, which is agreed upon and reinforced by the social consensus of the community. We all agree when we run the Bitcoin software, and when we buy Bitcoin, we agree and adhere to that 21 million hard cap. That scarcity is enforced through the production of new coins. So the production of new coins is done in an algorithmic manner. I'm speaking very, very plainly here. I'm glossing over a lot of technical terms. And essentially, Bitcoins are produced at a somewhat predictable rate. These fluctuate a little bit, but over time, we see the production of 21 million Bitcoins have this sort of asymptotic curve. Bitcoin mining accomplishes both the issuance schedule of new coins. Bitcoin mining also accomplishes security for the protocol. So what Bitcoin mining does is when a Bitcoin miner expends energy, so the Bitcoin miner expends upfront costs, so that CapEx by purchasing the machines, and then ongoing OpEx through electricity consumption, maintenance, other sort of things. Bitcoin miners exert that upfront cost and then receive a percentage of the block reward. And the percentage that they receive is dependent on how many other miners are out there. So it's a relative share. It's essentially kind of like, it's a percentage of your work that you've put in. That block reward, so the reward that's given to the miners, protects the network because the miners are essentially taking real world energy and using that to burn in and record transactions in a sequential manner. So Bitcoin miners take real world energy, use that energy to lock in and cement transactions in a timeline, and they receive the block reward, and the block reward is compensation and an incentive for them not to reorganize those transactions in a way that would reverse them or that would tamper with that and that's why we call it blockchain. It's a chain of blocks. Tamper with the blockchain's transactions of record. So Bitcoin miners, the incentive that we offer them is higher than their incentive to reorganize transactions. That's the base security model for Bitcoin mining. It is the production and issuance curve. So it's how new coins are produced. It also is a way to ensure that each coin is produced through unfortunately costliness, which is an Szabo concept. The idea is that there is no free lunch. To have a Bitcoin, you either had to purchase it from someone who did the work, a miner, or you have to mine it, which requires proof of work, and proof of work is expensive and costly. That ensures that Bitcoin is fair. No one got a free lunch. No one got 10,000 Bitcoin gifted to them. Each one, well, you certainly might have, but I don't have friends like that.
I wish I did.
Would have had to, right, that friend would have had to.
We got to call Michael Saylor or Jack for that nowadays, right?
Yeah, I'm not that close with those guys, but I'm not sure if they'd still, they'd have to be really close friends. So you either have to earn Bitcoin or buy Bitcoin. And so that ensures a fairness to Bitcoin, which is a really unique proposition. This was a lot to unpack. There's a couple different reasons why Bitcoin mining is useful and very important to how Bitcoin operates. And I hope that was high level enough to be informative, but also hopefully we didn't get too deep into
Actually, I think that was absolutely perfect. I really appreciate you kind of giving an overview to kind of segue us into the rest of the conversation as to what mining is, kind of how they operate. But I mean, Michael, if you could touch on this now, what type of infrastructure goes into setting up and operating a Bitcoin mining facilities and what type of capital requirements go in to setting up a group like Foundry when somebody is becoming a Bitcoin mining group?
So I'm really glad you asked the first question to Dan, because that was a great overview of Bitcoin mining. In terms of, the mining space has evolved significantly over the last 10 years.
Mm-hmm.
So in the early days, you could literally mine Bitcoin with your PC. And the one thing about the Bitcoin algorithm that I find fascinating is how relentless it is to drive cost out of the process, right? It's one of the most efficient, it's one of the most efficient things we have. And over time, people have come to find ways of driving that efficiency, right? Like, how do we keep improving on it? And as the technologies evolved, we went to GPUs and a little bit of FPGAs, and then very quickly went to these ASIC machines that are focused on just securing the network. And then what's happened is there's this global race out there to find low cost power to keep these machines operating. And it's just, over time, it's just continued to scale. So it requires, anybody can participate in the network, which is one of the really cool things about Bitcoin mining. So if you want to get into Bitcoin mining, it costs you a couple $1,000s. You can buy one of these machines, you plug it in to a special location, and you can mine Bitcoin, right? So anybody in the world can participate. Those that are successful have an edge, which usually is around low cost power, ability to build out infrastructure at scale, being able to get your hands on these machines. So it's been fascinating, and it continues to evolve, and it evolves at just this amazing pace. The industry looks very different today than what it did 3 years ago, and it looks very different, from how it looked 10 years ago.
It looks very different from what it was 1 year ago. To be completely honest, I mean, from Iconic's perspective, we only started really paying attention to Bitcoin mining actually after I met Dennis over in Berlin. And one of the interesting things that we've started to see is a lot of capital from current large crypto players, as well as those outside of the crypto industries, what we commonly refer to as institutions, getting involved. But one of the things that is happening is the industry has evolved significantly. The business model of Bitcoin mining has changed drastically, not just over the last 5 to 10 years, but certainly even the last 1 year. Dennis, if you could tell us a little bit about, from what you're seeing, being one of the boots on the ground, as to how this industry has been evolving.
Yeah, basically, it is a fascinating observation. I mean, first of all, there's a big influence which is done by the overall sort of regulation and sort of acceptance of the sector, which is a good driver. But if you look at the actual business itself, I mean, it started clearly. If we put aside all this retail mining, where people just mine for this sort of dividend model for themselves, optimizing some resources, but people who invest actually as a business. It's transformation where originally people were looking for cheap energy and trying to build everything sort of a fully sort of vertically integrated company all the way, on each parts. Now what we see, there is more speciality. I mean, you clearly have emergence of large scale operation focused on co-location space, almost like in traditional data center segments. This is quite interesting because these guys, they come from a sort of traditional sort of telecom background. I mean, quite strong, 15, 20, 30 years of experience, we know how to operate a large scale operation. And I think this is the guys who will be taking all of this service part. I mean, they're not the miners themselves, but they're probably one of the most vital part of the infrastructure going forward, especially if you want to sort of being accepted by institutional players. I mean, you have to comply with a certain process, and this is the standards which is already exist, and I think they will be brought into the Bitcoin mining. Because I looked at how we can align it. I spoke with Uptime Institute a while back, and it is, let's say, a challenging to bring it from ground zero, to this level, acceptable level. Other thing is it's about the overall, let's say, management of hardware. I mean, it's a lot of components on the service side, on efficiency. And the blocks which people actually don't talk much about, which I see is a vital part of economics, is actual execution of how you sell your inventory. Because I mean, you can look and say, okay, I am optimized and I have a good tariff, which is cheaper than other region. But if you are using the wrong strategy for the liquidation, because I mean, we can see on volatility on the BTC price on a day-to-day, I mean, you can lose all your sort of all the pluses you obtain on the tariff. You can actually lose it compared to the other guys in the market on the trading, because this is an interesting part, which is and also I see there is more, let's say, fascination and people trying to get into sort of hedging instruments, which I think is still in development, but I think it's coming in as well.
So I definitely want to dive into that later, because one of the things that is neglected from a narrative space when it comes to Bitcoin mining, or how it's perceived, is the treasury management angle and all the different products that are available to them. But if I could actually turn it over to you, Yuri, really, really quick. One of the things that we kind of noted on here is, as the industry is evolving, more capital is coming in. A lot of this is being driven by certain financial institutions. From your view at Fidelity, are you guys seeing, is it actually factual that there genuinely is that much institutional demand, not just for Bitcoin, but Bitcoin mining as well? Or is it really kind of more of a myth that the institutions are coming, Paul Revere waving his flag that they're here, but we're not necessarily seeing it come into play quite yet, right?
Yeah. So first, I wanted to point out that Fidelity's mining efforts still reside in our R&D department called Fidelity Center for Applied Technology. So it is a proprietary mining operation, and so we haven't opened it up yet for external investors, right? But we are looking into that. But I did want to share some data from an institutional survey that Fidelity did both in 2019 and 2020, and it was a survey of hundreds of different institutional investors, ranging from VCs, hedge funds, family offices, endowments, advisors, and actually in 2020 that comprised both Europe and the US. And so while it was a larger study around Bitcoin and digital assets, and you can find some of those results on Fidelity Digital Assets website, we did include some questions around Bitcoin mining, right? And what was interesting to us is that 30% of respondents said that they are familiar with crypto mining, and then 20% said that they would consider investing in this space, right? And for me personally, the 20% number was surprising, right? This was a big survey across the spectrum. Obviously, saying on a survey that you are considering investing doesn't mean that you will actually invest, but that did lead us to do more market research on investor demand. So I did talk to some investors, and so my initial insights there are generally for VCs, or at least the ones I talked to, Bitcoin mining perhaps is not the type of investment business they would invest, right? It is capital intensive, and you likely won't see 5, 10, 100x return in Bitcoin mining. Unless Bitcoin price goes up substantially, but at that point you are better off just buying Bitcoin if you're hoping that that's going to be the source of your return. But that is not to say that Bitcoin mining doesn't have good returns and that it's not an investable business. I believe it certainly is. And so we are still seeing interest from other types of investors, RIAs, family offices, high net worth individuals. They are interested in this space and learning. But as you pointed out, I do see Bitcoin mining as the next step for the investor, right? A lot of them who are interested in Bitcoin mining already either hold Bitcoin or are extremely knowledgeable about Bitcoin, and this is their next step. I haven't seen yet someone who is totally against Bitcoin or knows nothing about it, but wants to venture into Bitcoin mining itself.
And I think sure, please, Michael.
Yeah, Patrick, I was going to say is, that was the genesis behind Foundry was, hey, how do we?
I see what you did there.
Let's go build a business to help institutional customers get into into the mining space.
Mhm.
It's very opaque. It's very difficult to navigate this industry. And we thought we had an opportunity to provide a lot of value to give access to capital, drive efficiencies through it, make it more transparent, make it easier to bring folks into the space. And I love the question of like, is institutional money coming? We've deployed $100 million into North American Bitcoin miners, right? Like institutional money is here. It's happening. It's happening like as we're talking about it. It's being deployed. So, and I think this is just the beginning. And I do think that as more people understand the space, they're going to become more and more interested in it. You know, long term, I really view it as it almost becomes like a utility.
I couldn't agree more. At the end of the day, it becomes it's certainly like a utility, a bit of a commodity to a certain extent, and especially when it becomes a bit of a rush to the bottom on costs. And you made that point earlier about how efficient you have to be on the cost angle to be a Bitcoin mining operator. And on that note, that actually opens the next question perfectly. And for you, Michael, you guys just opened up in North America. You invested $100 million into different North American mining groups. What made North America so attractive to you relative to Europe or to Asia, where a lot of the mining is already predominantly being done? For instance, we're hearing a lot from the groups here about how interested they are in jumping ship and coming to North America as well.
Yeah, absolutely. So we are focused on the North American market. We really want to grow the hash rate in North America. And that's our goal, right? Like our goal is not to be the biggest miner. Our goal is to really help the ecosystem and help as many miners as we can and really build out the industry here. And I'd say over the last 3 years, what we've seen is a lot of momentum and a lot of interest from folks who wanting to build out these large scale mining centers. So in North America, I think we got off to a late start. You know, the Chinese, they were the ones to introduce the ASIC at scale. And quite frankly, the Chinese investors quickly jumped onto that and they built out these big facilities there. But in North America, once people started to see that opportunity, they realized, wow, we have an enormous amount of electrical infrastructure. We have a lot of abandoned power, and we've got a lot of cheap power. And we can take advantage, you know, with the Bitcoin mining, we can take advantage of that. And we've got a stable political environment. We've got a stable regulatory environment. And there's a lot of capitalists in the US. So when they see these opportunities, they want to jump on it and figure out how to exploit it. And
if you've been paying attention to the election over the last couple of months there, I'm not sure many people would agree with the politically stable part, but I mean, at the end of the day, the fact that we're calling this discourse political instability in the media nowadays just shows how actually political and regulatorily stable the United States truly is and why that is such a strong destination for this type of capital. One question I would like to ask, and I don't even know who to direct this to, I'm just going to open this up to anybody, but do we potentially see Bitcoin mining as it now becomes more established as a financial instrument over time, and certain groups are making very how do I want to phrase this, deliberate jurisdictional attempts in mining Bitcoin? Do we see this becoming a geopolitical topic over time? Do we see countries and different jurisdictions inevitably become involved and maybe not even regulate, because that's already part of the conversation, but become involved in Bitcoin mining?
I think Bitcoin is very attractive for different governments across the world, especially ones that might be cut off from the traditional financial system. You cannot cut off a government from energy resources within their geographical bounds. So they can take that excess electricity and convert that into Bitcoin, which then unlocks and gives them access to the financial system. So from a state level, you know, I think that's a pretty attractive proposition, especially since a lot of mining now is done at scale. States have the ability to operate at scale. They have hydroelectric dams, they have solar, they have nuclear or other sort of power centers that they can very easily take those miners and pin them to absorb that excess electrical capacity or cut into existing electrical capacity. So From a resource level, energy is abundant across the earth. It's just unevenly distributed. We've got electrical capacity everywhere. It just depends on how well it's being utilized. As everyone in this group knows, whenever you create electricity, it doesn't transmit perfectly down the line. You can't transmit electricity 1,000 miles away and it will all get there. You lose a lot down as you transmit it. So Bitcoin miners are this resource allocation or it's sort of equilibrium for energy across the world. That sort of levels it out between different higher areas of electricity versus lower, and states being the ones that sometimes produce or create these energy centers, are well equipped, and I think it becomes a very attractive proposition for some of them to tap into those energy resources to mine Bitcoin.
Can I add some things?
Please feel free to.
Yeah, I'll divide this sort of question with two sort of parts. One is, let's call it geopolitical. We have, let's say, certain countries which, from a country level, we have a certain restriction, as Dan said, basically access to a more wider, let's say, acceptable financial system. And for them, it's a new means of payments, of settlements, just the foreign trade. The other thing is basically, usually in the same regions, it's for people who live there, became as part of the sort of alternative export of capital, because in a way we're able to generate sort of a BTC, let's say a hash rate on a local level, but eventually the BTC becomes a more sort of international means of payments for them. Mm-hmm. So that's the one thing which is, I think, should exist and continue to exist. And this is where I can draw a parallel with, let's say, the offshore jurisdictions like 10, 15 years ago, where we have a division where if you want to be accepted in sort of Western markets, more acceptable jurisdictions, I mean, you cannot go on the dark side of the moon in a way, and I think this is what we're going to be seeing. Probably, I would not be surprised that the hash rate origination, the compliance will look much deeper, especially if you work with a big sort of a trading sort of the banking institutions. They're going to be looking at this. I personally, basically, coming from banking, I know where it's going. So we're trying to sort of reach out to chain analysis last year. Mm-hmm. And we integrated some of their products internally for monitoring and risk management purposes, because I guess at the end of the day, I mean, it is coming, because I'm sure if you work on a big scale, people want to see that you don't play around with blending the hash rate on some dodgy jurisdictions. Yeah. So yeah, that would be interesting, I think, and challenging for some players as well. Yeah.
That's actually a very, very good point, because one of the things that has been frankly lacking in the Bitcoin mining space is professionalism. It was done on a retail basis. You use your PC. The first Bitcoin were mined with Satoshi's laptop, probably at some point in time. The industry evolves. It becomes these mining pools. We all know what the issues around certain mining pools may or may not be. But we have seen a lack of genuine professionalism in the Bitcoin mining space. But that seems to be being solved a little bit. Maybe, Michael, if you could tell us a little bit about kind of what you guys are doing at Foundry, that you're more professionalizing the Bitcoin mining space and making this more accessible to those institutions as they are looking to onboard in the space.
Yeah, so it's a great point, Patrick. I think, I've always called the Bitcoin mining the wild, wild west, mm-hmm. Because it was, as you get into it and you're trying to navigate to figure out who's real and who's not real, and everybody's got a big story. It's difficult to navigate because it all sounds so good, yet very few people have actually pulled it off. So we spent a lot of time. We've built a really strong team so that we can be the trusted partner mm-hmm. for these large institutions that want to come in. And quite frankly, the space is moving so quickly. We do believe that, within 5 years, nation states will want to have a strategy around Bitcoin. Mm-hmm. And just like they have a strategy around gold, just like they have a strategy around oil, they're going to want to utilize their untapped resources and be able to have some advantage in procuring their own Bitcoin. So we've worked very hard to try to streamline the processes for these institutions to get in. When you're talking about wiring $10 million to some Chinese company, everybody gets nervous. So we've kind of been able to step in and help make that transition a lot easier for folks. And where do you put your machines, right? So not only is it what machine do you buy, it's where do you put them? And we've, spent a lot of time vetting kind of the best hosting providers out there so that we've got a safe place to put the machines.
And frankly, it's not even just that. I mean, if you look at the procurement of the machines, the placement of the machines, then the operations of the machines, then the maintenance of the machines, and a whole bunch of groups are now using AI supposedly to optimize the operations of the machines. But to be honest, that only really covers maybe the first half of the business model behind Bitcoin mining. The other piece is treasury management, the trading of the Bitcoin, liquidation of the Bitcoin, different strategies. I mean, it's kind of a common misnomer that we have in the space that Bitcoin miners, they mine the Bitcoin, they win the Bitcoin, and they immediately go and sell it for their operations. The truth is that they engage in lending markets. They engage in crypto capital markets, if there is such a thing to be called, to cover their OPEX and to continually raise for new CapEx. Dennis, if you could tell us a little bit about, and maybe Yuri as well too, some of the different financial products and different ways that Bitcoin mining groups engage in these crypto capital markets to optimize their balance sheets.
Well, I'll speak basically from experience and what I see over the last, let's say, year and a half, the development. First of all, I want to add, it was a great sort of change, transformation of the market because, let's say, from Q2 last year, I saw the big drive, and actually it was a part of the things I refocused in terms of the trading towards US because, I mean, just let's say almost overnight from Q1 to Q2 last year, it became more and more sort of active from a trading and banking perspectives, and clearly offered much wider options. We have it in Europe, but unfortunately, Europe is now tailing behind and trying to catch up. But what's important, let's say, from a mining side, as you clearly say, some miners operate here in less sophisticated models. Those who are trying to address the working capital sort of CapEx sort of needs, they're trying to see how they can optimize it on a trading strategies, purely just on a trading throughout the month, or if they can leverage some using the BTC inventory and as a collateral. Let's say the good thing what's happening now, we have other alternatives, not just the pure, let's say, trading focused venues who offering this collateralized instruments. So this is one thing. Other thing is basically hedging options where the futures and option market developing. I personally, from my perspective, see that the hedging sort of instruments sometimes fixing the price for a certain period of time, especially as you know that part of your cash flow needs to meet sort of the payments for just the maintenance of infrastructure. So and I think this is a one thing that needs to be less elaborated more and push. Let's say there's a certain mismatch that I see between the miners and the professional community, because especially the guys who come trading banking side, trying to pivot and develop the products for them, there's sometimes a mismatch in terms of understanding what is needed. But clearly the hedging instruments needs to be adopted. And I think it's a great thing to do. And I can sort of align it with traditional mining when I was working there. The only problem I see is, as Mike's pointed out, a lot of groups in mining space, because they've been developing organically for the last, let's say, 3-5 more years. Some of them we're evolving as a sort of almost like a family-run structures, not a proper sort of setup, and sometimes even the legal structure. You can ask the guys, where do you mine? I mean, this is a wallet, but this is something that does not correspond to actual business. And I think this is the biggest problem, especially if you're trying to work. I mean, if you're doing sort of more hedging, sort of want to develop a hedging strategy, I mean, are you going to sign ISDA and trying to go and speak to a miner, sign an ISDA, and yeah. So this is let's say this is a different things that needs to be still to be adopted, and I think this is something that offers a great opportunity for some players to come in and take this part and try to offer the services to miners.
Yes, absolutely. And I mean, maybe Yuri, if you could speak to some of the please.
And I just want to say that our Bitcoin mining operation had far better uptime than my internet connection today, it seems. But no, look, as far as Bitcoin and hash rate futures go, Bitcoin futures we are closely monitoring, not just even from the mining perspective, just other groups at Fidelity who are working in this space. We think it's going to be an important aspect of Bitcoin markets infrastructure. I think for Bitcoin futures as they exist today, they're maybe not that useful for miners yet, just because they relatively have short expiration rate. And miners would perhaps to perfectly hedge their operation, want to hedge out a couple years out at least. Hash rate derivatives we've done a lot of research on, and I often joke that Brian Wright, who's on my team, I call him head of hash rate derivatives. So he led a lot of research that we've done. We examined a lot of different products in the space. We even paper traded some of those contracts with the leading providers. And initial learnings, the space is early, it's definitely evolving. You have a lot of variety in these products, right? You have hash rate futures, difficulty swaps, OTC traded, exchange traded, physically settled, cash settled, Bitcoin settled, so many different varieties. And they're all trying to achieve the same thing, right? And so we have even yet to see, if one model is better than the other, and we have assessed the impact what this contract would have on our operation. But still, the initial insights are it's early. There's no liquidity in them to meaningfully hedge your operation, and so we're really just on a lookout. But I think both of those types of products will be a fundamental part and a very important part of Bitcoin mining ecosystem and markets infrastructure in the future.
Yeah, I absolutely agree. I think, Dan, you were looking like you were ready to make a point here.
Yeah, I wanted to kind of bring it back to a higher level, like what instruments exist today for miners. So miners can either sell their coin on spot markets, so they can take their coin, sell it for USD or fiat or whatever else they'd like. Lending and borrowing has become increasingly a more sophisticated operation in the crypto space. So there are a lot of big lending counterparties and counterparties where you can deposit so for example, you can take your Bitcoin, you can lend it to companies like Genesis Capital or BlockFi. They take those Bitcoin and then they lend those out to different counterparties who use Bitcoin for their operations. So you can earn an interest rate on that and use that, for example, to pay for like OpEx. You could also borrow against your Bitcoin using Bitcoin as collateral. Bitcoin is a phenomenal collateral. It is fungible, instantly sellable. There's almost no maintenance cost holding it. I compare and contrast that with, like, for example, like let's say an inventory loan where you would borrow against your machinery or inventory or something else. I think, Bitcoin is pretty incredible in terms of lenders who want to lend dollars against people holding, against people who want to borrow against their Bitcoin as collateral. So miners, they have Bitcoin, they can borrow USD against that. Of course, they run like a margin call risk there, where if the price of Bitcoin drops significantly, like say March 12th, you could get margin called, or those your collateral might be liquidated. And then finally, there's instruments like options, which covered calls seem to be a popular instrument that miners use. With a covered call, you're essentially selling your upside above the strike. So, for example, if you sold a covered call at for Bitcoin at $20,000 with an expiration in December, the other counterparty will pay you a premium for that optionality. Someone will pay you a premium to have the option of buying your Bitcoin from you at $20,000 at the end of December. If Bitcoin is below that, you keep your Bitcoin and you keep the premium. If Bitcoin goes above that, you keep your premium and you sell your Bitcoin at that strike. So I think covered calls are another interesting strategy for miners. Enables them to sell some of that upside, which I think, from an operational perspective, and I'm not a Bitcoin, I haven't operated a Bitcoin mine. I've just written about Bitcoin in sort of higher level terms, Bitcoin mining in higher level terms. Selling your upside for them seems like a pretty attractive proposition, considering that like they've already expended the upfront cost. Recouping some of that in the forms of a premium seems like a pretty interesting opportunity.
Yeah, I'd like to jump on that, Dan. I think it's a great topic because most of the miners that I've met, the traditional miners, they're all focused on how do I produce Bitcoin at the lowest cost possible, right? Like they're operational guys. That's all they think about. And in the last 12 months, being part of the DCG team, The Genesis guys have kind of brought me under the wing, and they've got all these products, and I'm like, oh, all right, there's a whole part of the world where you can make money with money, and most miners don't think about it that way, right? They either liquidate instantly, or what's even worse is they try to time the market, right? They think that they're good day traders, and
you think they'd have heard of HODL before.
Yeah, exactly. But you can't with mining, because you got to pay your expenses, right?
Yeah.
So we've been working very closely with the Genesis team on their derivative products, and I basically said, look, I can be your customer. We have our own mining operations. Teach me how I can do my treasury management better and how it would work for a mining operation. And we're experimenting. We're experimenting with these covered calls, and so far it's wonderful. It's an amazing product. And it's like, wow, why aren't more miners taking advantage of this? And you got to be smart about it. You got to really think it through. And that's what we've been doing the last few months, is kind of experimenting with different strategies. But I think that we're definitely entering a new phase here where miners are going to be taking advantage of these new products. And of course, lending against the crypto, earning an interest rate on the stuff that you do want to hold. There's all of this kind of treasury management that's really been, it's been pretty immature, I would say, up to this point in the mining space.
And it's definitely becoming significantly more sophisticated, just because the demand is now being there. And I think similar to what you saw with crypto trading, where you started seeing people with more capital markets or financial background enter the space. And because of this, you're starting to see Bitcoin become, let's say, maybe a little bit more correlated than what it used to be historically. You're starting to see these financial minds entering the mining space, just because it does look very, very similar to certain products that we do have in capital markets. Dennis, I can see you're holding your microphone here. It looks like you're chomping at the bit to jump in.
I just wanted to add on this point, because on the hedging, exactly, I mean, what I said, that let's say using the BTC as a collateral, this is what Dan clearly highlighted. The biggest issue is the margin call. And I think this is because it's the infrastructure business. I personally don't see it's a good product for miners, because it's clearly sort of creates a huge exposure for you. It's an excellent product for the guys who do the trading, who actually sit in a long position on Bitcoin, trying to lend it out, and obviously using it for the short-term sort of trading strategies. But for miners, it's a dangerous situation, because it's the infrastructure business, it's a long-term business. I think what I personally also looking at is actually, if I either fixing the price, which I see in a shorter period of time, for a few days, or actually going to the zero call, or basically just selling the call options, because I think that's something that creating, let's say, an additional instrument for your planning, basically, especially for mid-term. And if you want to expand, there is additional things that you can play around with some collateral, but at least this is a major thing that is needed at the moment. Yeah, it's true.
So I'm going to kind of pivot the conversation just a little bit, as we are getting close to the end, and I do want to open up a few minutes for Q&A. But one of the things that we've really harked on during this conversation was institutional participation in Bitcoin mining markets. And with crypto becoming more professional, mining becoming more professional, starting to see this capital enter the space. One of the groups that theoretically would be disenfranchised in this, because frankly, they don't have hundreds of millions of dollars to deploy to crypto, is retail, of course. And it used to be that you could mine crypto on your computer. Those days are now gone, unless you want to mine a shitcoin. But how can retail participate in Bitcoin mining markets? How can retail get exposure to Bitcoin mining facilities?
I guess I'll pick this one up. Retail has been priced out of Bitcoin mining for quite some time. Bitcoin mining is a professional operation with the folks like we have on this panel, including giants like DCG and Fidelity. I mean, these are huge companies. To see this sort of interest, to deploy $100 million into a North American mining operation, I'm sure you all have done very, very large sort of operations, Dennis and Yuri. This is, it's sort of like lamenting that your common person, the common layman, can't go create a gold mining operation. Gold mining is very industrialized. It's a very highly capital intensive operation. The efficiencies gains through building, for example, let's say you find a vein of gold you want to go build. You buy the machinery costs millions, and then you want to hire 1,000 people and you need an HR department, et cetera. These operations at scale are required because you get efficiencies throughout the process, economies of scale. That's where the term comes from.
Mm-hmm.
So miners they need to be extremely efficient. And when you're a retail customer and you buy a miner online, you are competing against all these pros, and they're much more efficient than you are. So, and based on my the first introduction I made to what is Bitcoin mining, I brought up how miners expend proof of work, they expend the cost or energy, and they receive a certain percentage of the block rewards because that's split up between all the miners. Again, I'm glossing over a lot of terms here and making it overly simple. They get a percentage of the block reward over time after many, many blocks. So an individual miner is really at a disadvantageous sort of position because they're not able to take advantage of any of these cost efficiencies. There's also probably a ton of stuff, and this is where I think these guys could provide a lot more insight than I have. There's a lot of things that probably go wrong, and you don't know what's going to go wrong until you've done it a bunch of times. I work on product over at Kraken. You don't know until you start to get into the weeds and go execute. So I'm sure they've got tons of stories of how things can blow up.
Well, so I mean, it is difficult for retail to participate. Frankly, they just can't right now unless you're a part of one of the mining pools. And then at the end of the day, the narrative is that, well, you have these 4 or 5 mining pools that are effectively contributing pretty much all the hash power, meaningful hash power, to the mining or to the Bitcoin network. So Bitcoin is then centralized. Are we potentially then just re-centralizing Bitcoin, maybe away from these mining pools and into these more institutional players? And maybe if one of you would like to address what is the disincentive for mining groups to actually do that?
Well, Bitcoin mining pools aren't centralization. I mean, that's not necessarily centralization. Bitcoin mining pools are comprised of many, many, many different miners.
Yep.
Each miner is operating on a game theoretic incentive model of behaving properly. If they behave properly, then they receive the block reward. If they don't, then they potentially damage their block reward. So it's a basic financial game theory model. Mm-hmm. The mining pools want to ensure that their mining customers are happy. So they're going to operate by the rules. So I don't really see mining pool concentration. And by the way, that concentration has ebbed and flowed and switched between mining pools through time as necessarily. Mining pools are a collective. They're not one company.
Yeah, and I totally agree with that. And mining pools are becoming very commoditized product, and it's very easy switching codes between the two. And while we do have 510 that dominate the space, I don't see them as a point of centralization for Bitcoin. But I did want to point out another kind of decentralization aspect in mining that we're seeing. So. Obviously, and we discussed about this institutionalization of mining, miners are trying to achieve economies of scale and building larger and larger projects where they're really trying to get to that low unit economics, right? And that's why we're seeing now gigawatt plus projects being built in the world. And this is where it's hard for a retail or a small hobbyist to compete on. But the other different path that we're starting to see in North America is off-grid mining. And this is, the idea is to mine with a wasted or stranded energy, typically at oil and natural gas wells. And so for those who are not aware, so at an oil well, natural gas is often a byproduct, and oil drillers there are really caring about the oil and often don't care about the gas, and they see it as a liability, often have to vent it or flare it, and are really wasting that energy. And so what we've seen is a lot of energy producers are partnering up with Bitcoin miners and often even going into Bitcoin mining themselves, and they really see it as a tool to better monetize their existing energy production. And so these projects tend to be much smaller in size, very scattered and decentralized across, potentially tens of thousands of oil and gas fields in North America. And so I think that's another, which I think from a business model perspective, a solid, sound, and sustainable business model for those who own those sites and Not to say that retail can today participate in those projects, but I can see it in the future where you can buy one of those mobile data centers that doesn't cost a lot of money. You can fill it up with S9s, and it's going to be inexpensive way to efficiently mine Bitcoin.
Dennis, please.
Yeah, I just wanted to add, I mean, this is coming back to the point I raised before. It's about the business model, which is sort of changing. I think what exactly we're going to see, I guess, one of the big sort of push of the new players we might see, not from actual miners, trying to expand and grow, but from energy and oil and gas sector trying to sort of leverage these additional instruments through Bitcoin mining for their treasury. And this is something which can open completely different perspectives in terms of the overall decentralization and actually growth in the sector. Because I mean, these guys have a huge resources. I mean, the access to the energy plus the capital markets. This is a completely also the game plan which could emerge.
Yeah.
Absolutely. So I'm actually going to now open it up for some of the questions that we've been getting in. It looks like we have about half a dozen good ones or so. I'm going to start with this first one. I mean, obviously, one of the biggest misnomers and fingers pointed at Bitcoin is that it's very energy inefficient, that it wastes a lot of energy, it's very carbon negative, etc. Somebody here asked solar energy based mining farms. Do we have a take on that? Or do we think that solar energy harvesting is still inefficient for what Bitcoin would require? I'm opening that up to anybody because I don't even know an answer to that one.
Yeah, so let me just take a quick stab at the energy inefficiency of Bitcoin mining. I think, when you dive into the weeds of Bitcoin mining, the machines that have come out this year, they are 2 times more efficient than the prior generation, right? So think of it this way: we're going to be able to secure the network we actually secure the network twice as much with the same amount of electricity, right? And that's just an amazing development, and that development is just going to continue to happen. So it every couple of years, as new equipment comes out, it becomes more energy efficient, and we chase more and more renewable energy over time. In terms of the actual solar, everybody loves to, everyone wants to go mine with solar. I think conceptually it's a great idea, but it just doesn't work at any kind of scale today. So I do think over time, Bitcoin mining is going to push more and more people to find cheaper ways of producing electricity, which is going to be renewable energy, and it's going to help the overall ecosystem. But today, a solar farm, it's tough to hook up a Bitcoin miner to a solar farm and make money.
That's why we don't have solar energy everywhere right now. It doesn't satisfy what our global energy consumption needs are for the time being. So if I could, oh, please.
I just wanted to quickly add on that. And I often even don't look at necessarily the hash rate as the kind of metric for measuring security. I think it is a proxy for that, but I often would look at the actual energy spent as the security metric, right? Because fundamentally, energy is fundamentally kind of the asset that is underneath all the other assets, financial or otherwise. And so I really see Bitcoin as the more energy is expensed, the more secure system is, because for someone to attack the system would need to expense that much or more energy, right? And so I think that's very important, and we shouldn't think of energy as limited resource on earth, that if we spend it on activity A, that we don't have it activity B or C, right? We spend a lot of more energy today globally than we did 100 years ago, and I think we'll spend a lot more energy in the future. And I agree, just quickly on solar, right? I still think from off-the-grid mining, I see hydro, natural gas as the predominant ways, just because they're less intermittent. Definitely wind and solar, I've seen people deploy some of those, but there is other aspects of that business that you will need to keep in mind. So it's not something that you can do at scale today.
Dan, you've certainly made a lot of comments publicly about how it doesn't necessarily matter how much energy is being used in Bitcoin mining. And I'm going to say this completely wrong, but Bitcoin itself is really nothing more than just a conversion of energy into a financial good, money, effectively, right?
That's right. Yeah, it's Bitcoin. So when people look at Bitcoin mining, they see this large energy expenditure and they worry that, especially with the environmental concerns and that being top of mind recently, a lot of folks worry about that. Bitcoin relative to other monies is extremely efficient. Think about your existing financial system. You have tanks, planes, aircraft carriers, court buildings, people who man all of these things, the humans, the houses that house the humans, the cars that drive the humans to the facilities. You have servers, investment banks. The enormity of the energy consumption of the existing financial system cannot be understated. It is massive, utterly massive. Bitcoin in comparison is very, very efficient. Now, Bitcoin mining, what's really unique about it is you can think about these different disparate or trapped or energy sources anywhere of having like an order book. So the energy source is putting out a constant amount of supply, and there are only so many bids for that supply. When there's no bids or there's an oversupply and it exhausts demand, the bid for that energy is basically zero because there's no other use for it. For example, like the flared methane, like it was literally being burnt and wasted. So the bid for that is almost zero. And I love Yuri's, when he brought up that Bitcoin is secured by energy, that's exactly right. Bitcoin is about physics. It's more about physics than code. It's using real world energy. This, thermodynamic, it's a thermodynamic money. It's taking real world energy to validate and protect the Bitcoin network. And what's really cool about that is if you extrapolate this over time into the future, Bitcoin's protected by all excess electrical capacity or all excess energy. And at that level, at states start to get involved, the security behind Bitcoin's network it doesn't even become a monetary amount you can quantify. It becomes just like, oh, it's 20% of all energy consumption. And that's not a bad thing because that energy would have been wasted anyways. I think if you look at existing numbers of like how much electricity is wasted, I think it's like 20 to 40%. Because they just there's no demand for it at the power centers, or there's overproduction, not enough demand. You lose power when you transmit it. So Bitcoin could become an enormous percentage of the global electricity consumption, which isn't a bad thing. It's just absorbing what would have otherwise gone wasted. And that protection of the network is massive. I mean, a scale that, you could try to put a dollar number on it, but I'm not sure if you could since the bid is almost at zero.
Michael, it looked like you wanted to jump in there.
No, I love it. I think these guys are making great points, and it's so true. And it's going to happen. Like the train left the station, and it's just a matter of time.
I couldn't agree more. And actually, piggybacking off of a point that you were making there, Dan, it's actually perfect to segue into a question that somebody asked here, kind of a take on vertical integration of mining and electric grid operators. Do we see actors in the electric grid facility getting more involved? It goes a little bit along the off-chain, not off-chain, but off-grid aspect that you were speaking to, Yuri. But do we see this being potentially used as a mechanism for load management for that unused energy that effectively just does get wasted?
Yeah, it's already happening. Absolutely. The energy companies are absolutely waking up to this as an opportunity to level out their load. Makes them more efficient.
Yeah, and to add to that, I think Bitcoin mining as a business is a perfect load balancer for any grid, and they actually, I think, are going to soon start attracting more and more miners. So, and specifically in the U.S. With the Texas ERCOT grid. So in the U.S. you have 3 grid systems, West, East, and Texas, and it is a decentralized grid with many different small or large power sources kind of plugged into the same grid. And as renewable energy is being added to the grid, a lot of wind and solar is being built in Texas, that is increasing the potential of destabilization of the grid, right? These intermittent resources at a day when there is not a lot of sun or not a lot of wind, you may have demand that is completely accessing the supply on the grid. And so why Bitcoin mining is potentially perfect business is it is hungry for energy. So there are large scale projects that are demanding a lot of energy, but it's also type of business where energy consumption is the business. There's no other side business that you cannot immediately shut down on minutes notice your operation and give you that excess demand to someone else. And so why would miners want to do that? Why would they turn off all of their equipment for 1 hour, 2 hours, 3 hours, and sell back the energy rights to the grid? Because energy prices spike when demand is larger than the supply. And so, for example, ERCOT has a lot of government programs where they subsidize and incentivize load balancers to be part of the grid and not use their energy that they have rights to when there's a lot more demand. And I think Bitcoin mining, unlike other businesses where you need to do certain computation or running some other business that it's critical, you cannot on minutes notice shut your entire business, but miners can. And I think they're going to be a very important part of grids globally.
I absolutely agree. I think it's going to be interesting to see this integration occur over time. And that kind of brings me to the final question that I wanted to end with this evening. And we're maybe going to run over a minute or two, but I definitely want to get this in. Let's look forward, maybe 12 months, 3 years, 5 years into the future. And I don't want to dive into what the impact of the next Bitcoin halving 3.5, 4 years out might be. But what do we think the Bitcoin mining industry will look like 3 to 5 years from now relative to where it is today, given the context of how much has changed just even over the last 12 to 18 months? We'll just do a quick roundtable to kind of close this off. But Mike, I'll start with you over there.
Yeah, for us, my mandate, Barry, was pretty specific with me in terms of you're building a business for the next 10 to 20 years. You know, don't think about the next 6 months, 12 months. We're here for the long term. We believe that Bitcoin's going to be here for the long term, and for Bitcoin to be here for the long term, mining has to be here for the long term. So I think it's just a natural progression until we have these nation states that are trying to figure out how they use their grid to mine Bitcoin.
So I can expect that So I can expect Foundry will mine the final Bitcoin about 180 years from now, yeah?
It won't be me. I know that for sure. I'm an old guy. I'm an old guy here, so.
Fair enough. Dennis, what does the future of Bitcoin mining hold for us?
Basically, as I said again, I mean, the change to business model will transform who you call a miner. Basically, we will have an energy company, I don't know, oil, gas companies that will have a mining divisions. Then let's say the mining in itself will, for institutional, maybe transform into sort of a platforms where people just allocate the funding, and basically they know they're going to get a return in terms of either fiat or mixed with the BTC as a product. And for them, let's say they're going to outsource fully to the third parties, the professional providers who host for them the hardware, do the sort of the hosting and maintenance. So at the end of the day, I think the whole sort of whom you call miners, this is the major transformation will take place.
A very interesting take. Dan, if you could offer us some insights that you have here.
Well, I'm going to lean in a little bit in terms of my role in my company. So the financialization,
please do,
I think will be very, very important for the space. Having more sophisticated financial instruments like cash rate derivatives, having that be more liquid or a true market in the future might be a good way for miners to be able to hedge their assets. Bitcoin options, so covered call strategies becoming more popular. And maybe, increased, easier ways to lend your coin or have more stratified risk. Right now, you can lend out your coin, but you typically don't understand your counterparty mix on the other side. So maybe having like that, stratified different levels of interest rates based on different counterparty risk, I think would be a way as well that gets a little bit more, institutionalized. So yeah, the TLDRs, I think there's going to be more financial instruments for miners to use to hedge and ensure that their treasury management operation goes smoothly.
Wonderful. And last but not least, Yuri, if you could bring us home.
Yes, I think over next 3 to 5 plus years, as I said, I think we're going to see larger and larger industrial scale projects around the world Now we're talking about gigawatts. In the future, I think it's going to be tens of gigawatts. So that's one. I think the other avenue that we're going to see is off-grid mining, more decentralized, but a lot of different energy producers are going to get in this game. And it's even hard for me to say which of those two paths is going to be dominant. But I think both of them will play a critical role in the Bitcoin mining ecosystem. And then finally, as we've said today, Bitcoin mining is all about efficiency and should be all about risk management. So I do think that we're going to see a lot more financial products and products that allow you to hedge your entire operation, from counterparty risk to Bitcoin price risk, from hash rate risk, and many others that almost, I think in the future, Bitcoin mining operation will be fully hedged and almost like a fixed income product. You can think of it that way. So I think it's going to get absolutely streamlined with all these other products.
Well, so I really appreciate everybody for the insights and sticking around for an extra 5 minutes. Thank you all for joining, and thank you for the audience for joining in as well. It's certainly been a very, very interesting year thus far for the Bitcoin mining space. I'm very excited to see what comes out of this over the next couple of years. It's going to be interesting, to say the least. Once again, thank you all so much for your time. We'll be uploading this recording probably in the course of the next week or so, and we'd be happy to share it with you all. I wish you all a very good evening.
Thank you.
Thanks,
Bye-bye,
Patrick.
everybody.
Bye-bye.
Bye.